Every country is in debt. The United States, Japan, France, Brazil. Even the so-called richest nations on Earth owe trillions. Global debt has surpassed $300 trillion. Governments borrow. Corporations borrow. You borrow. But here is the question no one seems able to answer clearly. If every nation is in debt, who is the empire collecting the interest? We're told it's the markets, investors, bondholders. Harmless words. Abstract words. But behind those abstractions lies a network so embedded in the global financial system that most people never see it. This isn't about a single villain. It's about a structure. An invisible empire that doesn't need armies, doesn't fly flags, and doesn't run for office, yet quietly shapes the fate of nations through one powerful instrument: debt. Tonight, we trace its origins, its rise, its breaking points, the fallout, and the illusion of reform, and we uncover why the cycle keeps repeating. To understand the empire, you have to go back to a simple but radical shift in history. For most of civilization, money was tied to something tangible: gold, silver, land, grain. But as trade expanded, merchants faced a problem. Transporting physical gold was dangerous and inefficient. Banks offered a solution. Deposit your gold, receive a receipt. That receipt could circulate as money. But then came the twist. Banks realized most depositors never came back for all their gold at once. So they began issuing more receipts than the gold they actually held. This was the birth of fractional reserve banking. Money was no longer just stored, it was created. And whoever controlled the creation of money controlled the bloodstream of the economy. Over centuries, this evolved into central banking systems. Institutions like the Bank of England in 1694 were created not merely to safeguard currency, but to finance government war debt. From the beginning, central banking and sovereign debt were inseparable. Governments needed money for wars. Banks needed government guarantees. Debt became the bridge. And that bridge would grow into a global empire. In the early days, debt was temporary, a tool used in emergencies. But something changed in the 20th century. World War I and World War II exploded national debts to unprecedented levels. To stabilize global currencies after World War II, the Bretton Woods system was established. Currencies were pegged to the US dollar, and the dollar was tied to gold. This created trust. But it also created strain. By the late 1960s, the United States had printed more dollars than it had gold to back them. The system was cracking. Then, in 1971, the US closed the gold window. Money was no longer backed by anything physical. For the first time in modern history, the global monetary system became entirely fiat, money backed only by confidence and government decree. This wasn't presented as a revolution. But it was. Because once money was no longer anchored to gold, debt could expand without a natural ceiling. The empire no longer had limits. After 1971, something remarkable happened. Global debt didn't just grow, it accelerated. Governments realized they could spend today and defer the pain until tomorrow. Central banks could lower interest rates to stimulate growth. Commercial banks could expand credit. And each time growth slowed, the solution was the same: more borrowing. This created a powerful feedback loop. Economic slowdown. Central banks lower rates. Borrowing increases. Asset prices rise. Debt grows faster than the real economy. Over time, the world shifted from production-based growth to credit-based growth. In the 1980s and 1990s, financial markets exploded. Derivatives multiplied. Debt became a product, bought, sold, securitized, and traded. Governments weren't just borrowers anymore. They became dependent borrowers. National budgets began factoring in the assumption that debt would always be rolled over, refinanced, expanded. The empire's power didn't come from collecting payment in full. It came from perpetual interest. Because as long as nations remain solvent enough to service debt, but not strong enough to eliminate it, the cycle continues.